Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, March 4, 2025. We're looking at a daily chart of the SPY or SPDR, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had another flush day down, but wait, there's more. We had the makings, I-N-G-S, of a low today, but at the end of the day, they kind of killed the tape a little bit to take that away. However, she came up short of the 200-period moving average, and yesterday you'll remember that the title or the thumbnail of the video was, "We're looking for the low." Some of you will remember I've said it in these videos a number of times. We're looking for a February-March low. We're at March 4th. Mid-March is an important time frame. We talked about it last night. It's a full-on lunar eclipse, aka also known as a tinfoil hat event. Today is what they call an on-time type of situation. We talked about it last night. It's an on-time situation. We also talked specifically in the live room today about the 200-period moving average, and we do this often in the live room with important spots, whether it's above or below an important spot. A lot of times the market will come up short of an important spot. Why do they do that? Like they did today with the 200-period moving average. They do it specifically to screw two factions of traders. Those looking to exit a short at a specific place and those looking to buy a specific place for a ride back up. They came up short, screwed two factions of traders as designed. What we'll have to see is if in fact we get some follow-through type reversal action off of today's low price. I'm not going to call it the low. We had volume. I would have liked to see a little bit more volume, but if you look down here at the bottom, you can see an uptick in volume, an uptick all the way down. You could see as the market's rising, the volume is decreasing, and then all of a sudden the market turns and it starts going down, and what happens to the volume? It starts to go in the upward direction. We have some unfinished business down here at 571.20. That happens to coincide with the 200-period moving average, but not the reason for the 571.20. How do you like dem apples? I know everybody's discussing the whole tariff situation, and I just want to clear this up real quick. We had a lengthy back and forth debate about tariffs in the live room today, and here's the situation. About 4 or 5 months ago, I started talking about we're looking for a February-March low based on cycle analysis. Now, the cycle analysis had nothing to do with tariffs because who the hell knew when tariffs were going to take hold? We didn't even know if Trump was going to get elected, all that stuff. But what I did know, based on the work that I do and the work I showed in the MSF Masterclass series, we went over the 2025 forecast in detail, how we derived the February-March low and beyond. My point is, it's impossible to use the excuse that today's decline, for example, was because of tariffs when we were originally looking for a February-March low. So the whole decline from the time the market turned from a new all-time high all the way down here was in the cards. In other words, we were expecting a decline into a February-March low where we are now. How do you like dem apples? I realize it's a hard concept to wrap your head around. Nobody wants to believe it. Been doing this for over 3 decades. I understand nobody wants to believe it. But those of you who've been around a while that have heard me say it 4 or 5 months ago about the cycles, those of you that have seen me do this before, well, at least there's some of you out there that are, as they say in the trading parlance, believers. The rest of you, you might come around sooner or later. Flipping over again to the weekly chart, I just thought it was interesting to point something out. Big time weekly chart breakup candle low. Low is 575.35. Spiked it today, fought back to close above it. Now, we're not at the end of the week. However, it's interesting that the market, Mrs. Market, knows about that number, fought back to close above that number, at least on the day. The next big time breakdown candle in the sequence is all the way down here. The low is 567.89. We'll just call it a spike of 568. And the next thing below that is what we call a former breakout area, which happens to coincide with a 50-period moving average. Just getting our perspective from a longer-term perspective. You have to be able to kind of get rid of the noise, the daily chart noise. Now watch this. Here's the daily chart noise. Market's up, down, big down. There you go. So it looks like the market turned. We're in a downtrend, all that stuff. Last moving average in the line of defense on the 200-period moving average, certainly. That's daily chart stuff. Sure. What about the weekly chart? Well, I can tell you without a shadow of a doubt, knowing this firsthand knowledge from spending a lot of time, many, many years inside baseball, inside Wall Street, that money managers use the weekly 50-period moving average as a gauge whether the market is still in an uptrend or turning to a different type of trend, like a downtrending situation. Money managers are staying pat above the 50-period moving average as a general rule. And then you go to the monthly chart, what do you see? Well, guess what? They were a little bit extended, or I should say a lot extended, from home base. What's home base? The 20-period moving average. Can they come back down to the 20-period moving average? Can they go sideways for a while? Let the 20-period moving average creep up to price? Absolutely. Monthly chart, next big-time breakup candle in the sequence. The low is what? 567.89. It's the same one we looked at from the weekly chart. And what we know right now, taking the market at face value, is that for the last 5 months, she's going sideways. Nothing more, nothing less. Compare and contrast the daily chart, looks like a big up and down rodeo, to the monthly chart, where she's basically going sideways, eating time off the clock for the last 5 months, give or take. It's all a matter of perspective. You want to be a short-term trader, you want to be a long-term investor, you want something in between, we've got something for everybody. What about inside the numbers today? Anybody make money inside the numbers today? Live room members, inside the number members? Absolutely. Let's go check the numbers. 584 is our early pivot. Let's put that up on the board. Right of the vertical is today's activity. 584 is in green, signifying a pivot. They came all the way back to satisfy the pivot in the afternoon. They got rejected at the pivot, but the pivot is important. It's important in the morning. It's important in the afternoon. The pivot is important. It's a good number to know. Do you know what your pivot is each and every day? Let's scroll up and see what we have as the day starts to get underway. What's the scoop today? The market was melting down early in the morning, so the 0 dark 30 numbers don't pan out exactly. Let's go to 9 o'clock, 30 minutes before the opening bell. You'll notice down here, I'm just going to highlight a few things. What I urge you to do is pause the video, read the notes, and go back to the chart to double check the work. The support zone is between 578 and 576, give or take. It's a bounce back type of zone for a reaction back up in the other direction. Fair enough. 578 down to 576. And you can see here right out of the gate, first candle of the day, the low is 578.01. They ripped it back up to a high of 580.21. Hard to see on this chart. That's a lot of points really, really quick. Traders in the live room made a nice pretty penny real quick on that trade just a few minutes into the day. Later on, they got below 576, which came or became resistance until they were able to get back above it. And what we were pounding the table in the live room, and you'll see it in the notes, is get back above 576, and they'll give you or hand you 578, which they did. See here, they bounced back and forth. They got above, and then they start working their way back to the pivot. Pretty interesting stuff. End of the day, they collapsed back down. Where'd they stop? Right back in that zone cited at 9 a.m. this morning. How does that exactly work? Well, if you know your numbers, you know how that works. Pause the video, read the notes, go back to the chart, and double check the work. By 9:38, officially, nice trade. 581.20 is resistance on the way back up and a target. Yada, yada, yada. And yes, that is a technical term. Then we have another trade that gets put on the board. There's your spike the low and rip it back up in the other direction trade. Funny how that works. Nice trade again. These are things that we discuss all the time in the live room, in the notes, inside the numbers. If they make a new low, we have a spike the low and rip it back type of trade. 941. By 945, there's your spike to low trade. Funny how that works. Pause the video. Read the notes, go back to the chart, and double check the work. 571.20 is the next number down in the sequence. They never got there. They did come up short, but we were zeroed in on important stuff. Again, pause them, read them, go back to the chart to double check the work. We have a list of markets put up on the board each and every day. If you're interested, if you trade these markets, I would put these numbers on the board, see how markets reacted around support and resistance numbers for any market you choose. They're not going to hit all these numbers each and every day. These are numbers that, if hit, should generally provide a reaction in the other direction. They're also targets when the market's on their way to the number. What's going on over in Camp IWM? Well, that candle there is giving you the impression that that's some kind of a sign and or signal of a trend change. Could it be? Yes, it could be. Remember, don't forget, we were in an on-time type of situation. Are they going to turn it before they get to the convergence on this weekly chart of the 100 and 200 period moving average? It's possible. We don't know whether they will or they won't. We check on the volume on the daily chart, and you'll see down here, pretty good pickup in volume. So at least they're giving a hint. They have some characteristics of making a low. Monthly chart, IWM, into the, we'll call it a convergence of the 20 and 50 period moving average. Remember, above all the moving averages, the trend is in fact your friend. She is above all the moving averages on the monthly chart. That doesn't mean she'll close the month of March above all the moving averages, but she's there right now. That's all we're pointing out. About the transports melting down, you can see here, below all the moving averages, trend is your friend. The trend has changed, obviously. Go to the weekly chart, getting to the last moving average in the line of defense, the 200 period moving average. And those of you that have taken any of my classes that discusses symmetry will realize there's symmetry coming up. We're not there yet, but there's symmetry in the air. Monthly chart, we'll see what she does with the 50-month moving average. By the way, where exactly does symmetry put you on the transports? Right about 17 or 14, 740, 750, 760, right in that neighborhood. I didn't do the exact calculation, but this from an eyeballs perspective is where symmetry takes you down. So you're below all the moving averages. Just when you start to scare everybody away, they'll bounce the tape where market symmetry comes in. Not 100% of the time, but a lot of the time. Write that down. Put it on a sticky note. What about the Q people? Another sign and or signal of a trend change, similar to the IWM. Look at the volume spike down here. That's a pretty good volume spike, giving a hint that may be a decent low. We'll see. Got some unfinished business down at 486.85. I believe we put that one up on the board. Came up just pennies short. Low of day, 487.74. We'll call it a buck short. Sign or signal of a trend change. On-time type of situation. You have to pay attention to that. How about the financials? Just like that, all of a sudden, no longer are they above all the moving averages, trend is your friend business. All of a sudden, cut through the 20 and the 50 period moving average like a hot knife through butter. Down 3.5% today in the XLF. Volume pickup, they're likely not done on the downside. I told the traders in the live room today we had 49.50 as a buy it with 2-3 hands today. That was from an intraday perspective. They didn't quite get there. Low of day ended up being 49.64. Putting things in perspective, weekly chart, right into the 20-week moving average. We'll see what that pans out to be by the end of the week. How about an outlier, SMH or smash mouth, up $2.22, 1%. Is that a sign or signal of a trend change? Not really. Is it a pickup in volume? Yes, it is. Remember, we have this bearish, flaggish, wedgish thing going on. They are breaking, ING in italics, breaking down. Big time breakup candle low, weekly chart right there, almost got there today. And then the next one down in the sequence is all the way down here around the 100 period moving average. So this zone down here should be pretty good for what they call in the trading parlance a bounce. Looking at a long-term chart for a second, the monthly chart, above all the moving averages, trend is your friend, despite what you might see on a short-term chart from a rodeo perspective. Above the 20-period moving average, which is the first moving average, meaning first of the 4 that I follow, the trend is still up from a monthly chart perspective. When you look at the monthly chart, all they're doing here is eating time off the clock, going sideways. That's it. That's all that's been happening. Does that have to continue? No. Can that change? Yes. But we take the market at face value each and every day, do the assessment based on the data that we have. Right now, the data says, on the monthly chart at least, they're going sideways. Can you trade off a monthly chart? Not so much. Can you invest off a monthly chart? Yeah, long-term investors do. But can you trade from day to day off a monthly chart? And the answer is no. That's why we don't look at it every day. It's not helpful, but it's helpful to get the big picture of where we are. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.